Hello and welcome to the CNBC TV18 special. I'm Shireen Bhan and we're in conversation with the CEO of Coca-Cola, James Quincey. Appreciate you joining us here on the show. The last time that you were here in India was as COO in 2015. You're back today as CEO. This is your first visit after taking over as CEO. Let me just talk to you about the outlook as far as India is concerned. The environment has been soft. You've had the additional trouble, the uncertainty over the goods and services tax, which you have called out as being a slight disruption. Does it continue to be only a slight disruption, or have things improved on the ground?
No, things have improved on the ground. I mean, we've been clear that the things like the GST, policies like GST, demonetisation, some of the regulation improvements are great for the long-term healthy economy. We're very positive on them. Of course, implementation always has some adaptation. That's been done, and the business is bouncing back, and we're very positive on the future. We think it's going to lead to greater growth.
So let me pick up on each of those points. When you say that business is bouncing back, what does that mean? Because it's not been a quarter or 2 quarters of soft growth. It's actually been 6 or 7 quarters of soft growth here in India, in single digits. So when you say bouncing back, what is it that we should assume?
I don't think we're imagining it's going to be a straight line growth in India. I mean, we had very strong growth for a number of years. Yes, we've had a number of quarters. Adapting to the demonetisation was a disruption, and people adapting to GST was. But I think getting back to double digits, whether it's 9 or 11, ultimately what's important is that we're investing, building the capabilities, building the infrastructure to see long-term growth. We are ultimately long-term investors and partners in the business in India, and that's what we're really focused on. So, 1 quarter, I mean, every business that we've grown to be successful around the world has had multiple quarters of softness. So that's not the worry. The worry is, are we building the right things for the future in an environment that's positive? We see the environment as positive, and therefore we're focused on investing in the right things.
So, you've been betting big on India for a while now. In fact, your 2020 target of investing $5 billion in India, I think you're investing about 11,000 crores over the next 5 years to create what you see as being this agri-ecosystem in India. I'll talk to you about all of that in just a bit, but what would be the key levers for you to be able to grow the momentum from here on if you assume that things are in fact bouncing back?
I mean, ultimately what always drives the momentum for our business around the world is, are we doing the things that the consumers are interested in? Are we creating the brands and the products that the consumers want to buy? And are we creating value for the retailers, for their businesses in selling them? If we get those 2 things right, everything else, including the agribusiness, will do better. And I think that's our focus. Are we getting those things right? And therefore making the right investments to back it up. And I think the team is doing a good job in getting that right, and we'll see that investment program continuing past 2020.
So $5 billion by 2020. Are we looking at incremental investments over that number?
I think we'll invest as fast as we can grow the business. I mean, we're trying to bring forward investment. We're trying to find the opportunities. Sometimes projects can only happen at a certain speed. We're talking with other partners, big and small, about how we can find more projects in more categories to invest in. Of course, as and when those things come to fruition, we'll make the announcements. We're not going to save them all up for another big announcement in 2020, but we will keep looking for the right investment opportunities, and hopefully we'll find more ways of investing more money.
So how much of the $5 billion has already been invested?
I think we're well on track with the $5 billion, and we'll see that program through to 2020. We don't announce the specific number, but we're very.
I'm having my luck here.
Yes, it's worth a try. I agree. But we absolutely are confident investing through our number in 2020 and continuing to find more investments for India.
Speaking of the plan for India, I want to quote to you what your chief here in India says, and he said that we're going to explode our consumer portfolio. When you use words like explode, I'm imagining, what is it that we're actually going to see you do here? Is it going to be a continued expansion as far as your fruit-based products are concerned? Are we going to see you bring in more global brands into India? What's the plan now as far as the offering in India is concerned?
Look, I think the first thing that implies is we're going to do a lot more experimentation. We're going to try many more things. We've been trying more things on the juice-based drinks. We are trying things in water. We're trying in water with some extra things added. We've made some small forests in dairy. So we will bring in global ideas that have been successful around the world. We will innovate and create new local ideas. We will experiment. Not all of them will work. I think if we've got no failures, we're probably not trying hard enough. But so you'll see a lot more things happening, and those that work we'll continue to invest behind.
So this is part of your strategy to be more tolerant to risk, and that's what you're trying. That's the culture that you're trying to build at Coke.
Absolutely. I think there's someone once said We don't make mistakes, mistakes make us. I mean, if we're not making any mistakes, we're not learning anything. Of course, it would be nice if everything was successful, but it's unlikely to be true. And so we do need to be more tolerant of failure. As long as we learn from them, as long as we identify them and move on from them, but learn from them and build something better. It's all about learning about what works for the consumers and the retailers and therefore servicing them better. Whether there's a mistake or success, it's ultimately about the speed you can move forward.
So this experiment that you're talking about, when you believe that experimenting with ethnic products is going to be one of the growth drivers for Coke in India, when and how soon can we expect those offerings to actually hit the Indian market? And what's the thinking there? Because I know that in markets like Japan, etc., you are localizing to cater to the needs of the consumers there, whether it's vitamin C infusions and so on and so forth. So what do we truly expect here in India? How ethnic are you really going to go?
We'll go as far as the consumers want to go. Now, to be fair, the portfolio in India also is already a mix of global brands and great local brands. We have Coca-Cola and we have Thumbs Up. We have Sprite and we have Limca. We have Mazza, not just as a brand, but lots of local juice flavors that don't exist anywhere else in the world. So I think, you know, we already have a starting point that blends the global and the local brands and flavors. But absolutely it will go further. I mean, the teas we sell in Japan and some of the products we sell in Japan, people don't like in the US. The same will be true in India. There'll be things the Indians love that other people don't like. But in the end, what we will build is, a bit like Japan, a much broader portfolio. If you want to make examples simple, today the majority of our business in India is sparkling beverages. In Japan, it's the minority because we're strong in lots of other categories. So I think what you'll see in India is sparkling continuing to grow, yet the building out of these different categories, some of them drinks that you find everywhere in the world, and some of them very local. And I think that'll be the recipe of success, which is the blending of the global and the local. You know,
talking about the blending of the global and the local, specifically in the Indian market, and you talked about Thumbs Up, and that was an acquisition that you did in India. Do you continue to have the appetite to do more acquisitions, specifically in a market like India? Would that be a preferred strategy for you as you go forward?
I wouldn't call it preferred, but we're absolutely open-minded. We believe that we have global successes that we can bring to India. We believe we have people who can come up with local innovation ideas, but we're also open to partnering with companies, and we've followed this model around the world, whether we take a small stake and they continue to run it, or even we acquire it as we did with Thumbs Up. I absolutely see a role for acquisitions, small and medium, in India to continue to build out the business, and we constantly talk to entrepreneurs about ways we can partner together.
Is there anything on the radar, anything that's caught your fancy yet?
There are always lots of things I like to look at in terms of people coming up with great ideas. I'm always very impressed with the degree of entrepreneurialism that's out there. And we talk to people. Of course, it takes two to tango, so to speak. They have to want to do something. But I'm sure that in the coming years, you'll see us do more investments in local entrepreneurship.
Has anybody reached out to you? Have you reached out to anyone?
We're talking to lots of people, of course. I have to give my standard mergers and acquisitions answer, which is I couldn't possibly comment.
All the caveats.
All the caveats, of course.
But, you know, it's interesting, and I come back to Thumbs Up because the possibility of Thumbs Up actually emerging as your first billion-dollar brand in India is significantly higher. Do you feel confident of being able to get to the billion-dollar number in India anytime soon?
I don't know when the year will be, but I'm confident it'll get there. I think it's a fabulous brand. It has great resonance with the Indian consumers, and I'm sure it'll get there one day. When that day is, we could debate. I'm sure the local operators would try and add a few years just to be sure, but I think it will get there, and I think it's a great and much-loved brand, and we will continue to support it for the consumers who love it.
So let me, wrap up with my last question on India before I talk to you about what's happening in the rest of the world. In terms of the environment at this point in time, we've just talked about the impact of the GST, etc. You told me about what you believe will be the growth drivers for you. But the challenges that you face in India today, and there seems to now also be this sentiment of nationalism, MNCs versus local brands. We've seen what's happened in other consumer categories. That's played out quite significantly. Is that a worry at all? We've seen, sparks of that in markets like Tamil Nadu and Kerala. But is that a concern for you here in India?
I think the way we look at it is to view it like this. No business can be successful if the community is not successful. We have not tried to do everything ourselves in any country we operate. We always try to create an ecosystem that involves lots of local companies, big and small, whether it's from the small farmers that we've been supporting for 10 years growing mangoes to enterprises that sell us inputs. We want to be part of the community and being an investor in it. That's the way we see that we don't get into this kind of black and white debate between these sorts of companies or people are good and these aren't. I think it's about investing and being a good citizen in the country, and in the long term, that's what will play out, and therefore it'll be a positive investment and a positive relationship.
So, whether it is capacity utilization, it's the closure of plants, etc., do you believe that perhaps the worst is behind you and you are now going to see an upward movement?
I think the business momentum is returning, and I think that the momentum will move forward, and we will continue to invest, not, as you say, not just in the brands, but in the manufacturing, in the distribution. Of course, we will continue to try and make it the most efficient manufacturing possible, but we'll have to invest in new capabilities as well. As we get into new products, as we expand in juices, if we decide to enter into value-added dairy, we'll invest in new capabilities and new manufacturing and continue to optimize everything we have.
Where does the decision stand about value-added dairy, and how soon we can actually see you decide whether you want to foray more into that segment or not?
We're doing a number of experiments. We want to learn from those experiments first, so we're not taking any big decisions in the short term. We like to learn about categories. We like to learn what the consumer really is interested in. So we're going to do a whole series of experiments first, and then we'll make a decision. And it'll be very apparent when we get to that point, no doubt.